Welcome to the SIP, the Solstice Innovations podcast. In each episode, we chat with industry experts and innovators in insurance and insurtech. Join us for insights on trends, technologies, and the stories driving our industry forward. Let's sip on knowledge together at the SIP. Hi, this is John Umstead with Solstice Innovations. This is a two-part episode of the SIP with our guest, Robert Cole of National Risk Brokerage. In part one, we're talking to Robert about his role at National Risk. And in part two, we're talking about his role with the National Flood Association, or the NFA. Hello, Robert. Welcome to the SIP, our podcast. I appreciate you taking some time to be here today.
No, absolutely. I appreciate you having me.
Hey, Robert, let's start off with having you talk a little bit about your role at National Risk Brokerage and what you do.
Sure. So National Risk Brokerage is a broker in the financial institution space. We focus mainly on lender-placed insurance. So both flood as well as hazard insurance. And I would say a majority of our business tends to be in the residential property market as opposed to commercial. But came here via worked for an insurance company for a number of years right out of college, ended up transferring over to a financial institution, was there for a number of years working on their insurance line of business. And then I guess you could say I'm batting for the cycle now. And so now I'm a broker working in between the insurance company and the financial institution. And it's been great. It's been, a way to, I guess, kind of help both sides. Take the role of the broker as being educational for both the client as well as the insurance company, of kind of bridging that gap and augmenting both sides. And so it's been great, and love what I do.
That's good to hear. A lot of people don't love what they do, so someone does. So I do too. So I wish that on everyone. But hey, you've been around for a little while, and you've seen some technologies come and go. What innovations in insurance technology are you most excited about, and how do they improve efficiency, in insurance in general, but also in the brokerage space specifically?
So sure. So on the lender place side, I would say, over I get 20 some odd years that I've been doing this, obviously you've seen a lot of technology changes, right? And so, I've been around before the smartphone and everything else. And so, we've gone from trying to track insurance policies, manually, and it's a little bit better than Excel spreadsheets, to, I remember the days where we got OCR and you thought that was the best thing ever, right? Because you're scanning the policies that come in and you're automatically pulling the effective dates and the expiration dates. And, we're now, how could it be any better than that? And I would say recently what you've seen is some of the changes where carriers are coming on board and working with the brokers and the insurers on developing, calls out to websites and pushes and pulls to make sure that everybody's on the same page, right? And so keeping up to date with insurance information so that we know that there's gaps in place and the financial institution can do what they need to do to make sure that their customers are properly insured. Outside of that, the other thing that I guess excites me, or some of the conferences I've gone to, and seems to be where you're using technology that's in place in a new way that's benefiting the insurance industry, is as you're looking at the claim process, to me, the coolest thing recently has been virtual inspections, right? And so the whole thought of, I'm no longer scheduling the one guy that happens to be, in the hurricane zone that has to come out and do the inspection and go through that process. Not that that's not going to be important for a lot of risks, but for the ones that you can, and you can take your cell phone and you can go around and show the lender, hey, I'm making the repairs, or here's the lumber, it showed up on site, and having them be able to more, I guess, to more quickly release funds and keep customers on the right path. I think that, number one, it's helped speed up the process, but also customer satisfaction is much higher, right? Because they're able to see and participate in that, and they're not frustrated with trying to work through a third party that just doesn't feel like that they have to be there. So I think that those are a couple of things that have been great over the last couple of years.
Yeah, I completely agree. Myself and some others were recently involved in an online interview, a video meeting interview discussing claims in the NFIP world, and whether or not we felt like there were enough adjusters, boots on the ground out there doing those inspections, and if there were enough good ones. And and I think unanimously our response was no, there aren't enough. Therefore, there aren't enough good ones either. And part of that is, I think, because it's harder to get newbies into the profession, and so there's a shortage of adjusters out there, and so things like virtual inspections, I think, can help alleviate some of those pains.
Sure, and I mean, in my mind, it's never going to take the place of a inspector for
Yeah,
those properties where you need somebody to walk through that process. But on some of the partial claims where you can take advantage of it, and even if it's not a final inspection, right, it's just releasing that next set of funds that kind of gets us towards the point where you've got to bring in a full-fledged inspector to move through that process. I think it can do nothing but help, to your point, the shortage.
yeah, yeah. So let's talk not so much technology, but in a sense, it's technology. But let's talk about data and data analytics. And in what ways do you use data analytics, you yourself or at National Risk, to inform decision making and provide better coverage recommendations for your clients?
So for National Risk, we're a small broker, and so don't necessarily have access to some of the same tools that everybody else does, but we leverage our carrier partners, right? And so those carriers are some of the larger ones, and we're able to take some of the tools that they have and help our clients use them more effectively. And you know, I, this question is really pertinent now because I've seen a huge influx as we continue to see more and more in the Washington Post and the Wall Street Journal about the insurance crisis, right? Of affordability, availability of coverage, whether that's flood or hazard or what have you. It's becoming top of mind, and there's a lot of clients that want to know just from their risk management standpoint of am I doing the right things? How is this impacting my portfolio? And also their regulators are asking the same questions too, right? And so you've got whether it's the FDIC or the OCC coming in and talking about how are you managing this risk and what are you doing in order to feel comfortable around that. And at least what the way that I've coached the clients that we work with is, the stories that you see, number one, take with a grain of salt that everybody is, they're not insurance experts, right? They're journalists. So, there's a lot of different people that are working on this, but it's a great question that should be asked. And what you need to do is understand how it impacts you. And so, there's an insurance crisis in Florida. If you're not writing loans in Florida, perhaps that's not going to be as big of a deal for you. Same thing with California. And so, what is it that you can take from the information that we have tracking insurance policies and making sure that people have the right amount of coverage? Whether that's placement rate or, how quickly, if they lose coverage, do they find new coverage? What's that volatility around? And getting very specific about your financial institution and your bank that's helped them respond more appropriately to the people that are asking questions, whether that's externally their regulators or internally their board of directors or the chief risk officer. And so it's helped some of the people I work day to day with financial institutions better prepare themselves to talk about a whole section of the economy that they're not experts in, right? And so they're lenders and they're looking for help on the insurance side of better educating the people that are asking and should be asking those questions. So it's been the whole data analytics and being able to break all that stuff down has been hugely beneficial.
Yeah. Yeah, and you mentioned regulators a couple of times in that response. So let's take a twist on the question and look at regulatory standards. So, what kind of specific challenges does National Risk face when it comes to adapting to some of these evolving regulatory standards in the insurance industry?
It's a good question, and especially in the flood marketplace, looking at the interagency group, and so that's the OCC, the Fed, the FDIC, the National Credit Union Board that's coming together, monitoring these financial institutions. There's a list the responsibility, the mortgage mandate written in the Flood Disaster Protection Act basically says if you're in a 1% annual chance of flooding, and so you're in a special flood hazard area, you should have flood insurance. That seems really simple, but they have written so many different questions and answers and clarifications around that it is very complex in order to meet those guidelines, right? And so it's not just the right amount, it's not just insurance, but the right amount of insurance. And, on the hazard side of the business, if we've got a homeowner's policy, we're happy. On the flood side, it has to be the same as or better than the NFIP, and trying to dissect and compare policies where the NFIP is kind of the outlier, right? That is the weird policy as opposed to everything else that's state regulated that is a little more uniform. And so it's just a special area. And I would say we always have challenges around when clarifications are made. It's one of those age-old problems of you fix one thing and you break two other things, right? And so the clarification ends up asking additional questions that we've always got. So it's a never-ending process. What I hope happens at some point in the future, as Congress has talked about changing the NFIP and different parts of that process, is we take a step back and look at it. I'm going to take one of Senator Kennedy's favorite quotes. Let's put something together as if it was done on purpose, right? And I don't agree with that on the FEMA side. I think that they do a great job. Same thing with the NFIP. But take a step back from the regulations and just say, let's get back to the basics and just make sure that people have flood insurance instead of worrying about whether or not it's $20,000 or $20,500, right? It's put some reasonability around it is what I hope happens at some point in the future.
Yeah, so that brings a question to mind, if you don't mind me asking, but I'd also like to make a statement because you mentioned the NFIP quite a bit in that response. And the statement is that one of the things I like to tell people that really aren't too familiar with the NFIP is that you can't really think of it as purely insurance. It's a unique hybrid. It's insurance kind of, but it's also a benefits program. And so it's just unique. It's different, and I think everywhere I've ever gone in my career, unless you have been in the NFIP business, it's hard to understand. It's hard to grasp that because otherwise you just kind of tend to think of it as just another line of insurance, and it's not.
Oh no, I completely agree, and it's one of those where it's a public policy initiative, right? And so on the private side, it is a product that you're buying to mitigate your risk. On the NFIP side, it's kind of like the tax codes of, well, we're mitigating the risk, but there's also a lot of other things that we're doing in order to get the behavior that we want. And so, we're going to make sure that people have X amount of coverage, and it's basically that as you're moving in and out of, the grandfathering that used to be there, or we're going to sell policies at a loss like before risk rating 2.0 in order to get people to get into the program. So there's a lot of different levers that have been pulled that would never happen on the private side, right? They wouldn't be selling policies at an unactuary, they'd be out of business. And so having that public policy push is important, right? Because it is the government doing some of their core functions, but it definitely, to your point, it's a different product altogether.
Yeah. And so the question then that I wanted to ask you, put you on the spot,
Sure.
and maybe it's unfair to do so, but you talked a little bit about reform, the NFIP. If you were king of the world and you could change one thing about the NFIP, what would it be?
Wow. Okay. So and so this is my personal opinion, right? And so not reflective on my business partners or my clients or whatever the disclaimer is that you want to put on there, is I think that the NFIP would be better served raising their caps, right? So the $250,000 cap to me is just, it's one of you're signing up for the most expensive losses. If you're in the insurance industry, you understand there is a reason that everybody wants people to insure to value, and there's a co-insurance clause that's forcing you, right, to basically fully insure your home. With the flood program being artificially capped, the chances of you getting to that cap every year that we have inflation becomes greater and greater. What used to be, it'll be a full loss before you get to 250,000. That is a partial loss on a lot of different people now. And so it's becoming easier and easier and easier to have a full payout of an NFIP policy, which is just a more expensive product. If you're going to be able, from a standpoint of make it affordable at a dollar basis, right? It's raising those caps so that the NFIP can benefit from some of the less likely risk and get some of those cheaper risks on their books.
Yeah, I was recently visiting some agents down in Louisiana and showing them a new system. And pretty much unanimously, they all said, "Hey, you should just default coverage to 250,000 because that's what I'm going to recommend to the policyholder." And rarely do I go under it, so just default to it and let's move on.
Yep.
All right. So, hey, can you talk about any recent trends in client demands or expectations that you've observed?
So, I'll refer back to the other question that we were talking about of, basically wanting to understand more about their portfolio. I think that I'm not going to say autopilot, but for a long time, the lender-placed industry on both hazard and flood did their job and things continued to tick along. There were questions from the client mainly around customer service, right? Of how quickly are you answering the phones? How accurate is the information as far as making sure that you're placing insurance on the risks that are there and that there's no unknown risks that we're worried about. And then paying claims on time, that type of thing. And that's starting to transition now to much more of a risk management decision. And so while it doesn't necessarily impact the product that we're offering from a lender place standpoint, there's a lot of information that clients are diving into because the exposure management pieces of what we're doing. And so if you're tracking a portfolio of loans, everything about that portfolio on an insurance side, and insurance is becoming a bigger question at a macro level. And so the changes in client behavior is really trying to better understand what's going on with their portfolio to make sure that they're properly mitigating the risk. And I would say that that's even more true on the commercial side than it is residential.
So when you're working with those clients, do you find that there are any common misconceptions, either in flood or not in flood, with their coverage, and how that affects the policyholders?
So when I think of misconceptions in the flood space, there's especially at the client or customer level, it's the but it's never flooded here, right? And so it's on every article that you read, and it's become a great kind of standby quote that different insurance commissioners as well as politicians are using around, if it rains where you are, it can flood where you are. I look at it from a different approach because I think people hear that, but it doesn't necessarily always register. It's, why should I buy flood insurance if it's never flooded here? Well, your house has never burned down, right? And so, but you have homeowners insurance. So it's you're insuring for something that may not be likely to happen, but you want to be protected just in case it does, right? And so I think it's a struggle of trying to change that mindset of somehow flood is different than other perils. And if you do talk to a customer and you're trying to explain, hey, your house has never burned down, right? There's never been an airplane that has crashed in your home, but you have these coverages that are designed to protect you. Flood is no different. And so, if it's not likely to flood, guess what? It's cheaper.
This concludes part one of this two-part episode of The SIP with Robert Cole.